Guy, feed us.
I'm gonna share my screen. I hope I get it right. What I'm gonna do, if you guys can just tell me if the pen, you can see the pen. Can you see the pen? Yes, you can. Good. Okay, very, very small slideshow for you just to show what we do, why we do it, because the importance, one of the important things in trading is being clear in what you're doing. And what we do is all about supply and demand. There's nothing more, nothing less, no funny things we do. We just look at supply and demand. We have some pretty cool algorithms to find that. We call them big money footprints. So our trading philosophy basically is comprised of market timing, stock selection, and the trade plan. That's the risk management here. The stock selection piece is the piece we're going to talk about today, because we're looking to identify what bigger players are doing in terms of potential position building. Because if bigger players are building positions, then obviously that's ramping up demand on the upside or more supply on the downside, which could fuel further demand and further price rises on the upside and further price falls on the downside. It's as simple as that. Now, obviously, the devil's in the detail. So let's talk about each big money footprint very quickly, and then we'll move on. So the first one's ever so simple. It's just volume acceleration, either with price rising, in which case you see the large spikes in volume in green, or volume increasing on the way down, where you see the large spikes and acceleration of volume in red. So give you an example of that. Well, actually, I'm not even going to give you an example of that. I'll give you an example of that later. But so the idea is that if there is accumulation going on, then while it won't show up, you can actually have a situation where shares are being held. And let's just say there's, for the sake of argument, 100 shares in a stock, very simplified example, and 50 of them are now being held and they're not for sale. That won't show up in any metrics. That's just what's going on. Well, now there's only 50 to be traded, and therefore there's fewer in the pot. And if buying activity is increasing, then obviously that's increase in demand, decrease in supply, price will go up. It's as simple as that, and it works the other way around. So it's just that simple. Then the second big money footprint is all about aggression, because it's all very well, lots of buying and selling going on. But if the price isn't moving, if say the price of a stock is $50 and you're buying it for $50 and I'm buying it for $50 and Adam and Celeste are all buying it for $50 and $50 is the price, it doesn't matter how much volume there is. If the price is only at $50 and no one's bidding anymore, and no one's selling it for any less, guess what? The price is going to stay the same. Now, when you have pricing moving and you've got the volume as well, then what that's going to create is lots of eyeballs. And those eyeballs look and go, hey, hang on, Bob, why didn't I get that move here? Price then goes sideways. And then these guys go, actually, I want a piece of this. This is like great value. And then they force the price up by buying more, but buying more with aggression. And of course, it can work the other way around, because you can sell with aggression as well, in which case to force the price down. So again, very simple stuff. We look for a move, then a sideways move. That's where we can contain our risk with our trade plan, and then a potential breakout from there. So you see the logic that we do. We don't do anything else. Now, talking about eyeballs, Paul Tudor Jones, famous hedge fund manager, made the 200-day moving average very famous. There are other key levels, as we call them, as well. And all we're talking about there is eyeballs. There's no magic to it. It's just that everyone's got their systems trained on 200-day moving average, 50-day moving average. And the more obscure it is, the less important it is, because the fewer eyeballs on it. The more eyeballs on something at one particular time, the more scope there is for big changes in demand and supply. Makes sense, doesn't it? Just give me a hand raise just to say this just makes sense. There's nothing peculiar in this. We're not looking at stars or planets or waves of oceans and stuff like that. We're just looking at supply and demand. Nothing more, nothing less. But we have ways of finding these things. Now, the next piece is where it really gets very unique to us, because we also like to deal in what's called scarce information. Now, imagine Coca-Cola, okay? Coca-Cola has a formula, and no one knows what that formula is. And it's hidden in this great big vault in Atlanta. And they have made a multi-billion-dollar, 100-year business out of that little, call it an algorithm, call it a formula. Now, KFC have done something similar as well. No one knows exactly what it is. It's all shrouded in secrecy, and they've built a multi-billion-dollar business out of that too. What is it really they're trading in? They're trading in scarce information and the repeat business that scarce information enables them to give. Now, take that to trading. If you have information that everyone else has, do you have an edge? Answer is probably not. If you have information that other people don't have, do you have an edge? Potentially, yes, you do. Now, insider trading is all about having the edge because you have information that other people don't have, and it happens to be quite useful information, right? Scarce information in a bad way, in a dodgy way. But what happens if you had scarce information in a non-dodgy way, in a completely legal way? Well, here's what we do. We analyze stocks by analyzing the options activity. But unlike everyone else that's got very fashionable, and we were the pioneers of this, we're not looking at unusual option spikes. We're not looking at unusual open interest or volume or anything like that. We're looking at something far more complicated than that. Because again, going back to the beginning of what I said, what we look for is potential position building. And it's really difficult to figure out what that might be in the options world. But that's what we've been doing for 20, 25 years. So there's an indicator called the options volatility indicator, or OVI. And what that does is when it's red, which is here, when it's red, it potentially means that there is negative option sentiment. And when it's blue and persistently blue, it potentially means there's positive option sentiment. And the magic happens with this because no one else has got it. Scarce information. Why? Well, it's US patented. So this is my patent. You'll see it's my name in there. Many pretenders, but only one real thing. This is it. And what we're doing specifically is looking to see whether there is potential position building going on in the options universe for particular stocks. So not only that, but also this algorithm makes for automated trading portfolios as well on the sort of quantity side of things as well. But it can be used as simply as this little indicator here, red -1 all the way up to blue +1 and everywhere in between as well. So again, bullish or potentially bearish. And then more magic happens is when you combine this scarce information with other information like the other big money footprints. Give me a wave if that makes sense. We're looking at a supply demand story here. So unlike other people, we don't look at lines and things on a chart. What we look to see is whether we can anthropomorphize it into what buyers are doing and what sellers are doing. More on that in a bit. Now, GE is a potentially very boring stock, except for it's not. So this is big money footprint number 5, and we call it shrinking retracements. And outside of what we do in options, this is the most complicated algorithm that we have. And it's only because we got the hedge fund experience to do this. So here's what I'm saying with this. CGE, the first arrow here, that's a decline of whatever percentage it is. So this is arrow number 1, it declines. Now, a few months later, it declines again, arrow number 2. But you can see very clearly that the decline in number 2 is less in percentage terms than the decline number 1. Can you see that? Give me a wave. You can see that. Now, what this can mean in the right context with potentially other big money footprints around, what it can mean is that sellers in this case are running out of steam. And if you've got the right circumstances with other big money footprints, oh, here's a key level, by the way. I'll show you that later. And here's a blue OVI, nice. If you've got the right circumstances, then you can actually see anthropomorphized on the chart is that actually, here we go, guys. Sellers are running out of steam here. Buyers are starting to potentially take over, which means you might be able to get into a move reasonably early, before it starts to get overbought up here. You can be getting in around here. So shrinking retracements. And again, where we're unique in this, there are other people who call things different things, but we're the only ones with the algorithm to find these literally at a press of a button. Pretty cool. And then the fourth one, actually, this is Sarepta as well. So even looking at Sarepta, look at this. First big move down, then second move down, not nearly as big, and then other big money footprints start to join the party. Some people might look at that and think of it as a head and shoulders or reverse head and shoulders, but it's not. It's shrinking retracements. It's sellers running out of power. And of course, you see here, that's rather nice. It's gone above a key level. OVI is good. We got big volume. Do you see the other big money footprints kind of joining in at that same time to create a low risk pinch point at which we can start to do something? So the last big money footprint is an interesting one too. Everyone's heard of flags and consolidations. They actually have a really rotten hit rate. Like most technical analysis, has a horrible hit rate. But let's now put it in context. Most of the time, we use consolidations to manage risk. Why? Well, because it breaks out of a consolidation, we buy. If it goes back down again underneath the consolidation, we sell. That's our stop loss. And we can create a trading plan around that where we can control our risk. That is the 99.9% use of a consolidation. However, in the context of other big money footprints around, then it could be seen as a stock drifting against its main trend. In a buy here, main trend is up. And a stock, if it just sort of like drifts in a kind of flaggy kind of way and the volume comes down as well, that also can be a sign of, lack of seller participation, which means the next burst of movement, if it's up, may well have the potential to keep going up to a reasonable profit target and maybe even beyond. So in that way, a consolidation serves two functions: one for risk management anytime, but two potentially as a sixth big money footprint. So, and again, here's a raptor as well. You see the consolidations above key levels, the 50 or the 200, with this and volume and OVI and big move before. You see them coming together like a little party. It's really, really cool. And that's all we look at. We simplify the whole thing. It's all logically explained, has some quantitative basis to it as well. And so now we're going to have a look at some stocks to see if we can find anything that's going on. Let me see. Sorry about that. I've just lost my place there. Let me just see. So we'll just do that. Here's all the big money footprints there. You can see there's actually some doubles in there, and there's a few more in there. But let's not go over all that. So all we need to now say is bullish big money footprints could be obvious OVI being positive. That's the option sentiment that no one else can see with the US patent. Key levels broken to the upside, a recent volume burst to the upside, recent thrust up in price to the upside with that, shrinking downward retracements and a consolidation, and also not overbought. We don't want to buy stocks that have kind of already popped, because then you're chasing and they can always pop against you. And the bearish side is exactly the same, but in the opposite direction, where you have a red OVI and the other things in the other direction. So we don't need to go through that. I'm going to do death by PowerPoint. So let's go and have a look in a minute to see what we can find with a couple of clicks. By the way, this is my support team, just to know that we're real people. Yeah, we're nerdy and we got a lot of tech going on, but yeah, this is our little team here as well, which is kind of cool. Cool little graphic that was made. But we have, the quant team and the trading team and the tech team here in blue. Then we got the support team here, and then the mentorship team here in orange, and then we got the comms team here in red. Anyway, so just to let you know, we're real people. Okay, let's now go on and see if we can find anything that's kind of interesting. So I'm going to go into a chart. Remember GE Capital, or GE rather. If you go back in time, this is what we were seeing. So let's just go back a little bit to when it really, really popped. Let's just do a year chart. Let's just do that. Okay. So you can see there's a shrinking retracement. There's a shrinking retracement. There's a little pop. There's a consolidation right on a key level. It's bounced off the other key level. OVI is starting to come into action, and suddenly we start seeing something interesting, and that's been the result. The result being, pretty much a double bubble on GE. Not the most interesting stock in the world, but pretty cool. By the way, Celeste, if you see the software looking different, it's because it looks different, because we just did a big upgrade recently, and there's more to come. So if it looks kind of snazzy and sweet and fun and nice, then that's the reason why. But let's go and have a look at some others. Before I do show you one, let's have a look at EXTR. This is one that popped recently. Look, there and there and there and all the other bits. There's a few big money footprints that were there at the time. They kind of show up on our charts. Pretty cool the way they show up, like pattern recognition. Right now, it's actually been forming a bull flag. That's a pattern recognition piece there as well. It's probably a little bit overbought right now, but just to show you this working recently as well. Now, what we'll do now is just go through a few stocks, and if there's time, I can go through what I think is going on in the general market as well. Is that okay with you, Celeste?
We've got like 5 to 10 minutes.
Okay, cool. We'll do that. So here's Baxter International. Could be interesting, but remember, we need a breakout. We didn't do the trade plan, but I always need a breakout. But this is looking potentially interesting. There's some action there. You see which big money footprints are green. There's a bias of bullish, but you've got an OBI that's good. You can see that. And you've got, it's gone past recently, gone past one of the key levels. That's what those little horizontal lines are. So we'll see. Earnings on the 27th of July, not too near, not too near. That one. Then we got CHUM. Now CHUM's been really out of favor. You can see that. But what you can also see is, let's just have a quick look on this one. I thought it had shrinking retracements. It kind of looks like it does. It's not popping up as one yet, but that kind of looks that. Now nothing's really happening yet, and we're kind of stalling below. I need it to get above this key level, or even the next one. But let's keep an eye on that one, because that might turn good. It's been out of favor. There is going to be some kind of rotation in stocks imminently that you can already begin to see it. So keep an eye on that. Not ready to go yet, but you never know. It might be interesting in here. If I look at my software, I go, well, how did I find that? It's got 3 big money footprints. It actually found it as a bearish one, but you never know. Let's just keep an eye on that one. It needs a few days, maybe even a week or two to get nice. Let's see if we can find something a little bit more interesting to pop now. Though this is the Cigna group. It's a bit messy in here. I can just see signs of life, but what I would like to see happen here, so again, don't go right now. I'd like to see it come back down to that 50-day key level. I'd like to see some OVI action, volume coming down, which it has been, to be fair. That's what this little sign is. It's been going up and then down, up here and then down next. So volume's consolidating. It's not ready yet. Don't chase that one, but it could look interesting in a little bit. Don't worry, I'll have 1 or 2 nice ones for you. This one's interesting. This is Catalent. So this one here, OBI is interesting. We've had some interesting volume action here. If it pops above this level of consolidation, that could be interesting. Correlates well with its OBI. That's what the 5 stars are for. And got some nice big money bias in there as well. So with that one, I think that one is, and you can see which watch lists it's part of in my, in my thing. There's my watch list, and this is our house watch list in there as well. So, pretty interesting. Who would say that one might be interesting if it pops to the upside? Anyone? Let's have a look. So it's got to pop to the upside. Now, DocuSign done the other thing, being completely the other direction. Here's, I want to teach you something else. When a stock rises and then forms a bar like this, where it opens high, closes low, you know that's not going up anytime soon. And I put that in the watch list there to my crew. So let's have a look. You can actually see it was in my review on the 10th of June. This bar happened on the 9th. That was the end of the week. That was when it was reviewed, and it slided down since then. Just something for you to be aware of. If it consolidates around here and we still stay negative, we've had lots of selling action. There's loads of supply of this stock on the market right now. And if it consolidates a little bit, goes sideways a little bit, maybe tickles the moving averages again, then this one has every chance of going back down even further. So worth keeping an eye on. Done EXTR. This is Fifth Third Bank. Now, the banks have had a big problem. Obviously, the regional banks had a horrible problem. Fifth Third is not a bank that's going to collapse. Very, very, very unlikely. And maybe that whole sector's calmed down a bit. But this is now showing you where a buy would be if it starts to climb back up. So you've got your area here of consolidation. So it might be something worth looking at in due course. Keep it on the watch list, just see how that goes. GEHC is next. This is a new stock, and recent IPO in January, so new stock kind of situation. It's got to get above here, but it looks generally interesting to me. Not much history, but I've got 1 retracement, 2, maybe that's ready to do some more damage. Not much history on it, but nice big money footprints. GH. Now this one we've done very well with. Guardian Health. Do you know when we picked that up? Have a look at the chart, see where we picked that up. You know it's here, don't you? Right there. Now this is even better. It's a post-earnings pop, which we also filter for. It popped at earnings. OVI was already preceding that, had some relatively good volume. That's volume relative to what had gone before. It popped, it consolidated, And now from that initial buy point of about 28, 29, it's now, well, it got to almost 40 very quickly. So pretty good. Now it's doing it again. There's the pattern recognition, bull flag. Do you see that? Let's just put my mouse over it. You can see bull flag. That's what that blue thing is, blue little thing. And it's now, if you haven't been in there already, it pops from this consolidation. There could be more upside. And you can see lots of big money footprints in there right now too. So pretty cool. Who thinks quite cool so far? Quite cool. Who would say that? The fact that we can find these literally in a click is very cool. I'd already prepared this watch this week because these guys are so stingy. They never give me any time with you, but never mind. I'm teasing you. Right, Johnson & Johnson also been out of favor for a while, but can you see it? You can actually see it's in this watch list here, but let's just pop that off. You can see the watch list. It's in my shrinking retracements bullish. Let me show you. 1, 2. I didn't find that. The algorithm found that. It just does it automatically for me. Pretty cool. And now what's happening is maybe a change in sentiment here. And if we can just get above here and go sideways for a little bit, could start to get interesting. I've been watching that one for quite some time as well. So, or since last weekend at least, and it looks potentially interesting. Don't go in there just yet. Let it play out. Let it make a consolidation. Northrop, this is NOC, Northrop Grumman. No OVI yet. Very, very little at least. But there's some interesting stuff here, isn't there? There's a bit of movement here. And again, although it's not showing up as shrinking retracements, they are kind of, it's settling down, isn't it? And now it's consolidating here. Maybe a bit of tub thumping from the people who want to go to war. That could do quite well here. I joke, of course, but you know, it's potentially there. The sellers have dwindled. You can see it in the chart. We just need a bit more OVI and other things, but it's a pretty low risk entry point. If it breaks this, it's low risk because you'd stop would just be under there, under that key level. This is Raymond James. We loved this one, and we actually started looking at it around here when the OVI turned right here. You can actually see that it was also well, actually near the end of May. So okay, around here as well, and that's been pretty good. It just needs to settle down. It's popped now, so just let it settle down and find another situation. But when you have a financial stock doing this, and it's right after earnings, who do you think's forming all that area there? They're in the lockout period. They're in the lock-in. Then they're out of the lockout period at that point. So insiders can legitimately buy their own stock there. It's not insider trading, but they're feeling confident, and that's what I think might have happened there. Then United Health. Let's have a look at that one. I like it. And it looks like it could be messy. You've got the shrinking retracements. Here's that. Here's that. Here's the OVI. Here's lots of volume. Do you see it? As the stock goes sideways, the volume contracts as well. There's no sellers in there. The sellers have got weaker here. The OVI is there, so the options traders are looking interested in this. It's consolidating. Now, that doesn't look like the prettiest of consolidations, but now let me show you what happens when I put the chart to 9 months. That looks nicer. What about 1 year? That looks nice and tight there, doesn't it? So this is an interesting one for sure, and it's recently gone through the key levels.
We have only 1 more minute there, guys.
Oh, look at that. Okay, well, I'm almost done. You know, I'm almost done anyway. Right. This is Vareline. This one looks bearish to me. So have a look at this. Consolidating underneath the key level. OVI is turned. Lots of selling action going in there. Big money footprints looking bearish. Interesting. If it breaks down, I think that could go and slide down. And then lastly, Wing, because we've only got that minute. Similar situation, consolidating around here. A little bit bumpy today. But that one looks more like something that could trickle down as well. So hopefully I've given you some ideas. Hopefully I've given you some clarity of how maybe to think about the markets, anthropomorphize them. By the way, you see that big red bar there nearing a high, open near the high, close near the low, often a sign that we're done. And in terms of this presentation, we are done.
Excellent. Fantastic work. Thank you, Guy. A lot of great tips there. Everybody, remind yourself too that the recording will be available. And since we're doing this early, you can get to that recording even this afternoon before the markets close if you want to review any of that. Yeah, great stuff, right, Jim? Thank you, Guy, for that. And just point out a couple of things. That GEHC, that's that GE Healthcare that spun off from GE. So that's a really cool stock. And that Catalent, actually another healthcare stock, just some ones that we've been watching that had a lot of debt, but some of that kind of like the banking stocks, the theme might be overdone. Some good opportunities in all of those stocks. I love everything that you showed, Guy. Fantastic. So thanks for joining us.
Thank you, Celeste. Thanks, everyone. See you soon.
All right. See you over there on Ask the Pros. Heading over there right now, everybody.
Oh, Tim says he's gobsmacked. Okay.
Great. I love that. That's awesome. Thanks, everyone. We'll see you soon.
Thanks, guys.
Over and Ask the Pros. Link is in the chat.